Hi, good evening, everyone. So let me have a look. All right, so let me see who's online. Hi, Daryl. Hi, Gary. Peter. Oh, is this someone new? When some. All right. Anyway, got a confession to make. Yeah. So evening, everyone. Got a confession to make is that I think I just made a major mistake. Yeah, I did. This week. This is one of my utmost failure in testing a indicator. Yeah, and I will just tell you why just now. So this week, actually, the indicator that I'm gonna that I had has was actually the parabolic SARS, parabolic stop and reverse. That's the actual name for it, parabolic stop and reverse. Yeah, short form I always call it PSAR. Yeah, doesn't sound like elegant name. Now, ever since I started playing with indicator, this is one of the indicators that I thought uh, for trend following wise, it would be an absolute beast. For what do I call it? Range trading wise, it is also tradable. Yeah, this was the assumption at 10th. Now, when I say I did an absolute failure in testing this indicator, what I truly meant to say is that I think I did an absolute disservice to this particular indicator which I tested. All right, so before I go on further, is that might again have to trouble you to actually paste the link to everyone, so it will always be the same link. And I realized that I shouldn't be sharing this screen. I should be sharing these screens. Uh, yep. Am I looking at the correct screens? Yes, I'm looking at the correct screens. Okay. Control plus. Yep. So this is the parabolic stop and reverse indicator that I've tested against nothing new. Custom indicator. Now, at this point, I have to say something is that it is different from the parabolic stop and reverse of the MT4 ones. Yeah, the MT4 parabolic stop and reverse seems to have a bit of a calculation error. In fact, yeah. So any of you who is interested, especially for programmer or part-time programmer like Gary, you can actually check the equation. I think is a bit different. Yeah, there's a bit of error. Yeah, so this one is actually the more accurate one. So, now, I tested this within a trend trading context. All right, so you can see that the stop loss is below the parabolic SAR. These are the instructions to it. Please take a look. Now, after about 240 trades, uh, it is still profitable for both sides of the story, 1R and 2R. And I'm actually quite disappointed at the results. In fact, halfway through when I tested it, I was actually quite disappointed because I realized that I did a major disservice. No doubt both are still profitable, and this time round, I'm using the 50 EMA as a trend filter. So as long as price is above the 50 EMA and I have a new parabolic dot, there will be an entry, and it's actually based on market entry. Yeah. So all these tests I'm doing it on H1. Trend filter is based on 50 EMA, and I've attached a few screenshots to tell you how I did it. Yeah. So after about 240 trades, for 1R, it's still profitable by 17%. For 2R, it's still profitable by 80%, as expected. Yeah. Now, the reason why I say that I'll review shortly why I'm disappointed at this result is because halfway through, I sort of realized that I shouldn't be testing at 1R and 2R. I should be testing at 4R, 8R, or even 5R and 10R. Because a lot of the time, and with even more detailed management, this indicator can actually let you hit home run trades, and I shoot at quite easily. Yeah, I haven't been touching this indicator for a long time because that's why I actually wanted to standardize it as per the rest, stick with 1R and 2R. Yeah, then I realized that that's how I did a disservice to it. So without further ado, let me jump into the trades. How I actually did the back test. So before that, as I mentioned, the moving average, I'm using 50 EMA. Right. This is this is just a random trend filter that I use, not that I specifically use this for any specific reasons. Now for the parabolic, I did actually let me check. Yeah. So the settings period Actually, this was a mistake. It was 10, not 8. Yeah. So the starting period I actually changed to 10. So on the indicator, this is what you all should be seeing. Alright, so I didn't change the first two settings. It is still 0.02, still 0.2. Now for the parabolic, the average period I change it to 10. And I disabled the zigzag. Okay, the zigzag is still repainting, by the way. There's no there's no zigzag that don't repaint. All zigzag repaints. Yeah. So for this particular, I don't use the zigzag. You can use it if you want. Not that I use it on my site. Yeah. But it is actually quite useful in a way. Actually, should I change the background color? Let me change it to something lighter. Is this easier on the eyes? For you guys? Is it better? Is this light gray better than the white? Some feedback, please. Yeah, I thought white is actually rather glaring, or is a darker color better. So let me see. Even a darker shade of green. The green doesn't stand out right. Let me change it to another color. Purple. Purple seems easier on my eye, so I'll stick with purple. Yeah. So actually, how I actually did this test was simple. Okay. So as long as price is above the 15 EMA, I'm only going for long. Price is below 50 EMA, I'm going for short. On top of that, the entire candle needs to be above 15 EMA, then I'll consider for long. So for this particular example, this is an invalid setup. Why? Because like I mentioned, the entire candle. So the candle actually touched the 50 EMA, so I wouldn't consider this a valid setup. Now this will be something that I will actually enter. So you can see the entire candle is above 50 EMA. As for entry wise, it is market entry. And as for stop loss wise, it will either be at the dot or 50 EMA, whichever is nearer. So in this case, it will be this way: market entry and the stop loss is at the dots. Yeah, thereabouts. So this is just my criteria for entry. And for stop orders, so let's say, so you can see that sometimes there's another additional criteria is that if I'm going for long, sorry, I'm scrolling my screen about. If I'm going for long, the candle needs to be green. If I'm going for short, candle needs to be red. And the validity of the trade is that if the first candle is red for long, then I'll just wait for the second candle. That's all. Yeah. So I'm only trading the first and second candle, not the third. Okay. So for example, for this particular one, the candle is entirely below 50 EMA. That is true, but unfortunately both candles are green. Then I'm no longer interested in this particular trade. So let me look for further ones. So for this one, the first candle is red. It's entirely above 50 EMA. I'm happy with it. It's red. Unfortunately, it's red, so I can't trade it. The second candle is green. I can actually enter this, but it will be a stop loss. Yeah. So in this case, 50 EMA is actually nearer. So my stop loss will actually be at 50 EMA. Alright, so that's about the criteria that I'm using. Okay. There's one more which I will review go along. Yeah. So this is actually how I did my testing. Let me go to a later date. I think that'll be easier for me to demonstrate. Yeah. So you can see again another example: price bearish bar, but it's above 15 EMA, not interested. Price is above 50 EMA, red candle, not interested. Don't have a clear-cut color, not interested. This one, again, not interested because it's a bullish candle. The second one, although it's a bearish candle, but you can see that price is not completely under 50 EMA. It is a winning trade, but it just isn't part of my testing criteria. Yeah. So this is actually how I go about it. Yeah. So actually over a large sample of trades, let me switch over to the data. So naturally for the 2 hour one, we'll have more. Oops. Yeah. So we have more stop losses. For the 1 hour, we will have more winners. Yeah. But at the end of the day, if you allow the trades to run, you still get more profits out of it. Right. But what happens is that why I say I did a major disservice to this particular indicator is that because of reasons like this. Nope, sorry. Let me go back. Yeah. So because of reasons like this, when price, I find that there are a lot more times, and this only comes with if you look at an indicator repeatedly testing it. Yeah, and I don't need a lot of trades. In fact, 240 trades, I can really realize that is that this will be a stop loss. If you allow price to run and with the actual function of parabolic stop and reverse, there are a lot of times you can let price hits 5R and above. That's the thing. That's what I realized. That because I only aim for a measly 2R, I miss out a lot of very, very fantastic trends. So in fact, for this one, if I zoom out long enough, I think this can easily hit about 8R, no problem. Yeah, if I really let it run. Now the issue comes in when, how do I actually trail my stop loss? I think that's at the top. Look, if trades can run, no problem. Issue comes in when, how should you be trailing your stop loss? Without original testing, I don't trail my stop loss at all. I don't shift my stop loss at all. But with repeated testing, what I found is this. With the first red dot that comes in, simply just shift your stop loss to entry. And then another red dot, and then you just cover to the 1R. So this is, you can slowly trail. And what happens is that I personally think that a lot of time trade will actually be able to run much more further. Yeah. At the same time, with trailing stop loss, as indicated by the parabolic initial response, there's a very good chance that you can hit a lot more break-even trades. But when times are good, you can actually hit a lot more home run trades. By home run, I mean 5R and above. Yeah, it's an interesting concept. I think you guys should try it out if you're interested in trading using parabolic as part of your trading arsenal. Yeah. So, and this is if you want more sensitive, if you want to tune the sensitivity, I think you can actually forget about the first two settings. They are not important. I mean, they are important to a certain extent, but play around with the average periods. Yeah, you should get what you want. Yeah, and since there's also a filter to it, okay, as how the dots appear, the parabolic calculations, and this is what I like about this indicator is that there are a lot of averaging methods out here. Yeah, most of the time, personally, if I really want to delve into a averaging methods for reversals, you can actually consider how do I actually pronounce this? I'll just say as Lager filter. Yeah, for the vast number of indicators which I tested, Lager filter is actually seems to be more suited for reversals. Yeah, so if you want something that is much more responsive, you can try Hull moving average. Yeah, for the others, you give it a play. Yeah, but just that personally, I prefer this too. Just at this time around, I stick with the SMA. Yeah, I don't want to change too much setting. Okay. But even with this unoptimized, what I really wish to emphasize is that even with this unoptimized file, I'm still able to get pretty good results, surprisingly. So if you are playing around with this indicator with a much more optimized setting, I believe you should be able to get better results, especially when you allow the risk to reward settings to actually be stretched. Yeah. For the sake of testing, I'm only going for 1R, but I think you should actually let it stretch to 3R, 5R, and beyond. Yeah. You should get way better results than this over a larger sample size. One thing to note, when I did this testing, and I think you should play that in mind, is this. Let me see if I can find an example. Now when I want stop losses, I can't find any stop losses. There it is. Okay. So this will actually be a valid trade for me. This will be part of my trading, which I will be back tested it. So when the first green dot, okay, when the first green dot appear, which is the big green dot, this will be a valid trade entry, stop loss, and I'll definitely be stop loss by that. Now, the second trade will be invalid for me. Why? Simply because this is just a visual reference. The second green dot, as long as it's not higher for a long trade, if it's lower, then I won't be taking this into consideration. Yeah, so think about it this way. If there's a new entry for long trade, you always want price to go higher. Yeah, if it goes lower, then don't be interested in it. Yeah, just lay it off. Yeah, so same for short trades. Now I need to find an example for short trades. Again, when I want to find stop losses, it doesn't seem to want to appear. Where are my stop losses? Where are my multiple stop losses? No, that's not an example there once. That's odd. There. This will be it. Yeah, I'm not looking at the zigzag, by the way. Yeah, I should switch it off. You can actually turn off the zigzag first. Yeah. The zigzag does have a use, right? Just in this time around, I don't want to use it. So this will actually be a first trade. You can see the entire candle is below the 50 EMA. Stop losses is at the red dot itself. Since it's a market entry, I'll be immediately in. I'll get stop ups. Now the problem is with the second dot, right? It's actually higher than my first stop loss. So long as I'm going for short, it should be lower, not higher. Yeah, if it's higher, then I'm no longer interested. Yeah, what this tells me is that the cyclicity is actually not there. Then don't be in a haste to jump in. Yeah, but this is something that I'll be interested to jump in. You can see that dot is actually lower, slightly lower. Doesn't matter whether it's slightly lower or slightly higher. Right? As long as it's lower, go for it. Visually, I think this will actually be a winning trade. Yep. So for the 1R, this will definitely be a winning trade. For 2R, this will be a stop loss. That's all to it. Okay. It's quite a simple and straightforward testing method. But again, what I wish to emphasize again is that for really good trends, I think it's like this one, start of a good trend. Enter, stop loss is at the 15 EMA. This time around it's 50 EMA because it's simply lower. You can have good risk, way better risk to reward ratio. Yeah, if you implement trailing stop loss in the management part. Yeah, so this is actually what I find out personally, which is good actually. Cool. All right, any questions? Please shoot it in. Right. So if I'm not wrong, the rules implementation is actually here. Should be everything which I can think of. Yeah. If you're interested, please try different trend filter. May not be 50 EMA. You can also use super trend. You can use 20 EMA if you like. Yeah. You can modify some rules at above. I mean, ultimately, during this show, what I want to present is that there are some indicators out there with simple implementation. It can be profitable. Then if you're interested, you should backtest and come up with some rules of your own to make it more profitable. Yeah, don't need to implement really, really complicated rules. Yeah, they are not cool. They are really hard to implement in a way. Yeah, it can get confusing at times. Yeah, simplicity works. Yeah, another takeaway is that, as been shown by my previous testing, yeah, is that if you allow the trade to run, you should get better risk to reward. In fact, better winners sometimes. Yeah, but just risk to reward, you should actually get better. Right. So, and today is actually the first part of me presenting parabolic stop and reverse. Next week, 2 weeks later, I'm still going to present about parabolic stop and reverse. And to me, there's actually another method of using it, which I find far more effective in using it for both the trending context and a ranging context. You still can make money from both sides. Peter, have I used this indicator to trade gold? No, but from the gold backtest, you can see that XAU for 1R, I still get 12 winners, and for 2R, I still get 11 winners, which is not bad actually. Yeah. So I mean, this is not a huge sample size per se, but just a gauge. Yeah. Oh, since you asked about this, I think the S&P one is absolute list. Yeah. So S&P and Nasdaq 100 for those that are long-term uptrend wise. I think if you minus off trading the downtrends, the short trades, you should get better returns for this. Yeah. What happens for gold is that tune in 2 weeks later, I think there's a better method for trading gold. Since I've not tested it, I can't say for sure now. Just at the back of my head, it should work better. Yeah. Because primarily the way I test this is still a trend trading context. It still works. Yeah, just I need to wait for the breakout. How about using this indicator in lower time frame? That's up to you to test. I've given you a head start in this by showing you that how it can be used. Then I would say the rest is up to you how you want to actually adopt it in your strategy. Right? The main aim of this whole me doing this show is not to present you a strategy. It is to present you a viable method of using it. Just that I've been lucky. Randomly 4 indicators that I like, maybe intuitively I choose those winner one, those able to win. Then since I've proven to you that via a simple method it can be profitable, then it's up to you to adopt it. Test it for 15 minutes. Now, the reason why I don't want to test 1 hour and below, I mean, sometimes I know I hop around with 4 hour daily and 1 hour. The reason why I don't want to test 1 hour and below is because of spreads. Yeah. Yeah, I don't know when it's new. So in my back test, spreads for the lower time frame become a huge factor. Yeah. I've traded lower time frame before, and out of nowhere, whereby the candle is not near it, I get stop out simply because of spread, and that's maybe because of news. Yeah, it can also be because when I allow the trades to run overnight during the changing of sessions, especially for Singapore time, 4, 5 a.m., liquidity is quite thin. Spreads can widen drastically. Yeah. Then in the back test, visually it might be a winner, but in actual fact, I can be stop out. Yeah, that becomes very, very apparent at the lower time frame. Yeah, which is unfair if I present this untruthful aspect. But if you're interested in doing it, I would say by all means go test it, but just be aware of spreads. All right, so that's the end of today. Parabolic stop and reverse. Oh yeah, one more thing to go before I forget. The zigzag, like I mentioned, is repainting indicator, but doesn't mean that it can't be used. It still can be used. Simply just looking at, it allows you to gauge the overall cyclicity. Yeah, don't use it for entry, but when the zigzag appears, it's easy for you to look at cyclicity. So use that as a gauge. Okay, yeah, but not for entry purposes. Just as a gauge whether what the cycles are telling you. Yeah, especially for this part, what I can pretty confidently tell you is that I don't really see a good cycle. Zigzag is just able to confirm it. That's all. Yeah, for the experienced trader, I suspect you don't need. But for the newer traders, you can just enable it as a visual gauge. All right. So let me check it. That's about it. Thank you for joining me this week. 2 weeks later, I'll come back with the same indicator. Don't delete it. 2 weeks later, I'll come back with the same indicator and I will show you another way of using it, which I find a bit more effective when there's a trending ranging context. All right. See you. Goodbye.